Market set to rally again this morning. Here's what you need to know before the bell. You know, one of the interesting things going on with the markets right now is despite all of the bearish headlines, podcasts, etc., all talking about the next leg of the bear market, economic recession, all those type of things, the market continues to perform better. In fact, as we've talked about before, the market actually kind of set a rising trend from those October lows. We've established a series of higher highs at this point. And yesterday, the market actually rallied above this downtrend line that goes back to April of this year. So this clears the way now with the markets above the 50, the 100, the 20, and the 200-day moving averages and our MACD buy signal in place. This sets up the potential for the markets to rally to about 4,200 here. Now, again, that certainly seems to be at odds with a lot of the recessionary data, expectations for slower economic growth, but analysts now starting to ratchet up economic growth estimates through the end of this year, expecting 2% growth by the end of this year in the economy, and S&P now increasing estimates on earnings for companies. So again, that really kind of flies in the face of this idea that we're going to have a recession because the Fed's hiking rates. All of this making it very challenging for investors trying to figure out where the markets are going to next. But in the short term, technicals remain very positive here. MACD buy signal in place, suggesting that markets can continue to rally. And again, this morning, futures are pointing higher, suggesting this rally is set to continue after breaking out of this downtrend resistance yesterday. Again, not a lot of resistance now to move up to the next level. Lastly, markets are getting a bit overbought here in the short term as well. Even though markets are overbought here short term, a bit of a pullback here towards the 50-day moving average wouldn't be surprising, holding this kind of cluster of support that exists right around 4,000, 40.50. A move higher here, and now we're making this move today, sets us up for 4,200. Above that, we then start to challenge the highs that we had back in heading in late August, heading into September. And then beyond that, we start talking about the lows that we had back in May. So again, there are several levels of resistance here between 4,100 and 4,400 on the index that are all possible targets here in the fairly short term, depending on what happens with the markets. And again, as we enter earnings season, if earnings come in better than expected, that's going to help give a lift to markets. If economic data begins to improve, that's going to give a lift to the markets. So there's certainly a case here to be made for higher asset prices in the near term. And as I said, the market continues to form a much more bullish pattern right now than bearish. And so again, while there's certainly things that could help turn this market more negative, another banking crisis, a rash of weaker than expected economic data, or even actually something else breaking in the economy because of higher interest rates, a sharp slowdown in consumption by consumers, as an example, could all certainly pressure asset prices lower. But the most likely probability right now is a move higher for stocks here over the next month or two as we're in the seasonally strong period of the year. And any eventual correction we have is likely going to confirm support at those October lows. That is probably the low point for the market for this cycle, at least for now. Anyway, that's what the market says here at the moment, but we'll keep you up to date to changes as they occur. I'm your host, Lance Roberts, and that's what you need to know before the bell.